What's going on, y'all? My name is Trey. This is Investing by Numbers. We talk all things stock market, stocks. We go over stocks that are undervalued, set for great returns over the long term. I go over my portfolio, the stocks I'm buying every month, that kind of thing. So if you're into it, if you're trying to learn more about that, please subscribe and please hit the like button. I know you get tired of hearing it from everybody that has a YouTube channel, but it helps push our content. It helps small channels like us especially, and I greatly appreciate it. So, all right, what's going on? We're still kind of hovering around this bear market territory with the S&P 500. We're down somewhere right around 19%. The 20%, which is the magic line in the sand for a bear market with the S&P, is right around $490.50, somewhere right in that range. I've told you all this for the last few days. When we're under that 20% mark with the S&P 500, that's when I invest all my extra cash into the market. So normally I invest 25% of my pre-tax income no matter what's going on. But if we're under that 20% mark with the S&P, anything extra after my emergency fund in my bank account is going into stocks. All right. And it's going into the stocks that I feel strongly about, the ones that I feel are poised for great returns that are safe. So let me talk about something that's going on right now that is really mind-blowing to me. And obviously there's a lot of fear out there, which is to be expected during times like these. Obviously, President Trump is he's a wild card. He's aggressive, and how he does things, you never know what he's going to do. Sometimes you don't really know what he's doing until after he's already doing it. So here's something that's different about the crash we're seeing right now, different than any other crash in history mostly. President Trump has a big red button on his desk in the Oval Office to cancel this crash. Yes, he does. And this might be the first time in history something like this is the case, because this crash is completely based around the tariff situation. And usually crashes happen with a multiple of events. Obviously in 2022, we had inflation, we had Russia-Ukraine war going on. But this one, we've already kind of been coming out of inflation. Obviously, it's still an issue, but this one was particularly caused by tariffs, which was Trump. And he could cancel that at any moment that he wanted to. I mean, at any time, he could come out and say, all right, we're good. We made a few good deals out here. We got some good deals out of it. We're back to no tariffs coming into the U.S., free trade, and the market would skyrocket. I guarantee you. All right. And we saw this yesterday when apparently some fake news came out about Trump going into negotiations, and the market started to run to the upside. Then we found out that wasn't completely the case, and we kind of came back down. But that run showed us the cards of the market. All right. It showed us that the second that things start to go easier and Trump announces that he's kind of stepping back from these hardcore tariffs, the market's going to run, guys. And Trump can do that anytime he wants. All he's got to do is press that red button. So if you're not buying during this crash, historically, you're already missing out on lots of long-term gains. I mean, that's just the fact of the case. I understand that everybody doesn't have disposable funds to invest. I understand that, and I hate that for anyone in that situation. But those of us that do, all right, those of us that invest part of our income into stocks, into our retirement portfolios, however it is you invest, these are the situations we wait for. I mean, this is what we live for as stock investors. These moments where stock prices aren't dropping because underlying fundamentals are bad. It's because the overall economy and the macro trends are on the downturn for whatever reason. Now, most of the times for the near term or the long term, these have an effect on American companies. But these companies that have already proven themselves will continue to do so. So these are fantastic opportunities to buy, and I urge you to do the same. All right. So I want to go over one stock I've been holding since before the 2022 crash, and I'm holding now. I bought more of it during the 2022 crash. It's over 40% of all of my investment portfolio. It's Shopify, all right? Shopify is a fantastic e-commerce platform that connects with small businesses, large businesses, and helps push out their merchandise and things of the like, all right? And they've had great numbers over the past few years. And I did buy this company overvalued late in 2021. It had a tremendous downturn during 2022. But throughout 2022, as the market crashed, I bought more Shopify and averaged down, all right, because I believe in this company. They put up great numbers. They've got a lot of history of growth, and I really like their CEO. He's all in on this company, and he's constantly pushing it to new heights. So I want to go over my 5-year price outlook for Shopify. We're going to look at some numbers. We're going to look at the historical PE ratios, where other companies' PE ratios might trade, so what we can expect. We're going to look at what analysts forecast for revenue growth and net income growth over the next couple years, and I'm going to run some of my own projections on revenue growth over the next 5 years, and we're going to see what kind of a price range this thing is going to be trading at in a few years, and I'm pretty excited about it. So let's get into it. Okay, this is my Robinhood account. I have a small position of Shopify in my Robinhood account. Obviously, right now, Shopify is trading somewhere around $75.50. I've got 19 shares at a cost average of $53.49 in this portfolio. Obviously, just over 1,400 altogether, but it's up 41%. And my main position is in my Schwab account, and obviously down here I've got 609 shares, and it's up, almost 17%. So roughly, 17% up right now on this position. I've been buying it over the last 2 to 3 years. So that's kind of where I'm sitting at. So my position is still up on Shopify. Obviously, it's down significantly from where it was, when we were at all-time highs back in December, January, that time. But let's look at some information here on Shopify. Some big things we got to look at are, historical revenue growth. Obviously here. For 2024, we had almost $8.9 billion in revenue growth. And over the last 3 years before that, we had an average revenue growth year over year of just over 24% per year for the last 3 years, which is pretty fantastic. Obviously, that'd be higher if I went back further. But the last 3 years is kind of something I like to look at. And our net income has been a little bit all over the place, but Shopify has been really aggressive in acquisitions and things like that. So obviously, we had $2.9 billion in net income back in 2021, but then we were negative 3.4, almost 3.5 in 2022. And obviously in 2024, we're pushing back up to all-time highs with net income with just over $2 billion. But let's check out the net margins. This is a number when I'm running price outlooks that I really want to look at and get a basic idea of where I might see the net margin in the 5-year outlook. So obviously during 2021, we got all the way up to an 81% net margin. That's insane. I don't really expect it to go back there. Obviously see this dip. And what happened back then was, post-COVID world, everything went, online. Everyone believed in the online sales sector. So companies like Shopify just went through the roof. And then as the market crashed after that into 2022 and inflation went up, what was happening during this time when Shopify had an influx of new users and stuff like that was they had to hire more employees. And then what happened when everything crashed? Well, then they had to let go of all those employees. So this happened with a lot of different companies. This was, even with Meta and bigger companies like that. So they've been recovering since then. Obviously, we went way into the negative. and we've been recovering. And like I said, they had a lot of acquisitions and things of the like. But right now we're sitting somewhere around, 22, 23% net margin, which is pretty realistic. But I think in 5 years, analysts do expect our net margins to go up. So I'm just going to give a safe standard of, let's say they get this thing up to a 30% net margin in 5 years. That's obviously growing, a few percent a year. And I think that's pretty realistic. If we don't hit those numbers, I think we'll be close. So let's check out the PE ratio of Shopify. Obviously, we've had some ups and downs over the last few years with our net income. It's been positive, it's been negative, and we can see that here with our PE ranges. Obviously, back in 2021, where things were leveling out with our earnings per share year over year, we were at a PE range that ranged from around 75 to 50. Okay, and then we hit some negative quarters there, and lately we've been leveling out again. We had a high of around 75 once again, and right now we're trading just under a 50, which, me, I preach that most of the time, these companies that have these double-digit revenue growths, especially over 20% year over year, 50% or 50 PE is really what I want to see it under for it to be a good deal. And Shopify is that. We're just under 50 right now. I think if we come over to Yahoo Finance and go to summary, it'll show us somewhere right around a 49 point something here. 49.2. So we've just hit under that 50 range. So just in that case alone, I think Shopify is getting into a buy territory. But obviously 75 to around a 50 here with these type of numbers over the last few years. And looking outward, I'm probably going to adjust that to be a little more conservative with what PE ratio range I expect to see Shopify trading at in the next 5 years, at least a fair range and a reasonable range. So let's check out some revenue numbers. We're going to look at what analysts are expecting in the next couple years on Yahoo Finance, and then we'll run some of our own projections out a little further than that. So here on Yahoo Finance, if we come over to the analysis tab and click that, we can kind of see what analysts are saying about the next couple years of Shopify. So when I'm on here, guys, I'll be honest, I really don't look at analyst recommendations as strong buys and stuff like that. A lot of times that's just noise for me. Price targets, sometimes that's noise. I really want to look at the numbers myself and come to my own conclusion. I'm not saying that if you're new in the market, these can't be valuable tools. Obviously, they can be, and I would expect that if you're buying a stock, you really want to see these price targets above what the stock is at if you're a new investor to play it safe, because it's going to be a little harder for you to give your consensus on numbers until you can really get your feet underneath you for doing some of these projections and being able to understand the revenue in relation to net margins and net income. But it's not hard to get a hold of. So as your knowledge increases, this stuff becomes less of an importance to look at. But if you're new, this stuff can be good to look at. But also, opinions, y'all know what opinions are like. So let's come down here to revenue estimate. I always like to look at the average estimate. Obviously, we have a low estimate and a high estimate. We got a lot of analysts here for Shopify, so there's plenty of data out there from analysts to average out. Sometimes with some small cap stocks, you might see like one or two analysts. So those get a lot more riskier because there's less people doing analysis on those companies. But so right now of 2024, we saw that Shopify's revenue for the year was $8.88 billion. So for 2025, we see the average estimate of $10.93 billion, which is a year-over-year increase of 23%. And in the year following, we see a $13.23 billion in revenue, which is a 21% year-over-year increase from 2025. So let's check out a little list I've got going on here of what I see. Okay. So, like I said, we've got right now 2024 revenue was $8.88 billion. And we saw analysts for 2025 saw a 23% increase, and then in 2026, a 21% increase. So let's say in 2027, we hit a 20% and we come up to 15.88 billion. And let's say in 2028, we see an 18%, and then in 2029, a 15%. So good numbers, but steadily kind of dropping as Shopify goes up. Now, this is just an educated estimate of revenue. A lot of times, over a 5-year span, we won't see it this, straightforward. We might see, 23% next year, and then we might see a 10%, but then we might see a 25% and a, 30% and then a 10%, So these are just kind of educated averages of, the basis of as a company gets bigger and gets larger and it continues to grow year over year. Over time, Shopify might increase these numbers over the next 5 years, but it's safer to say that as time goes on, these numbers might become a little bit less and less. And I think it's always better to play it safe on your projections than it is to, go for the home run grand slam situation, because we want to be a little more realistic. So we saw that net margins were around 23%. They've been as high as 80%. Who knows if we could ever get back up to those levels. But let's play it safe and say we grow a little bit over the next 5 years and we have a fantastic net margin of 30%. So with a 2029 revenue of $21.55 billion, with a net margin of 30%, that would give us a 2029 net income of $6.465 billion. All right. And we have our shares outstanding of Shopify are 1.22 billion. So to find our earnings per share, we divide our net income by the shares outstanding, and that gives us a earnings per share, which would be, with these numbers, $5.30. So what do we do with this data? Well, we were looking at the PE ratio for Shopify. We've seen it as high as 75, when it balances out, and we've seen it as low as 50. So let's say after another 5 years with these type of numbers, I think a 35 PE would be a really good deal with these kind of numbers. I think it would be a fair good deal. And I think, the upper end of that range would be a 55 PE, where it's starting to get a little overvalued, but still within a range. And anything over that would be a great time, maybe to trim some shares, take some profits. But for me, 35 to a 55 PE is an acceptable range for a company like Shopify in reference to what it has done and what these numbers would look like in the future. So if we, at $5.30 a share with a 35 PE, all right, we would have a share price of $185.50, which would be 145% gain on your money. All right. So that's pretty fantastic for 5 years. And in my opinion, that's on the low side. Now, that doesn't mean that in 5 years, Shopify's stock price can't get below a 35. Obviously, if in 5 years we see another market crash, this thing could drop to, who knows, a 20 to a 25, somewhere around there, maybe lower. And if they report, a couple bad quarters, you never know what can happen. But in my opinion, based on what it's traded at now, what analysts think the revenues will be in the future, I think this is a safe low range for the PE ratio of what Shopify will be. Now, let's say 45 PE, all right, somewhere right in the middle of that 35 to 55, we would have a share price of $238 a share, which is over a 215% gain on your money over 5 years. And if we had a 55, that would put us at almost getting close to $300 a share, roughly 285, almost 286% gain. Pretty phenomenal numbers with Shopify. When I do my low end, I really like to see at least 100% gain on what I think the low side would be. So the fact that we're close to 150% on the low side, that's phenomenal. And all the way, obviously up at the top, we're getting close to a 3x on our money in 5 years, which is phenomenal. And these are safe numbers in my opinion. I wouldn't say this is my bear case. This is my base case of what I think is a realistic, although safe approach to the next 5 years for Shopify. There's a lot of growth with them, and obviously analysts, they see this growth on track as well. If I didn't have over 40% of my portfolio into Shopify right now, I would definitely be buying it. But since I have such a large position in it, I'm looking for other stock. So I see Shopify as a buy, but I probably will not be buying, as I'm looking at Nvidia, ELF, and Adobe right now. Those are my three. I'll link my price targets for those at the end of this video. But those are the three I'm really concentrating on right now. That could change over the next few weeks. I might add one to the list. I might take one off the list. We'll just see how that goes. But anyways, guys, some really cool numbers there with Shopify. I really like Shopify. I've been buying Shopify stock for about 3 years now. I think it's a great company, but that's for you to decide if you want to buy shares of Shopify and how you feel about it. Obviously, this is my opinion. This is my outlook on price. Obviously, I've used some of the analyst data. I like to use the analysts as a starting point, especially if we've got about 50 of them giving an average there. I like to use that data because I think that's a safe way to do it. So anyways, guys, I hope you enjoyed this video. Comment below if you own any Shopify, and please comment if you plan to buy any Shopify after watching this video. And if you have any questions, throw them out. I try to respond to all comments, and they are greatly appreciated, especially when they're positive. Sometimes you'll get some negative ones, and those might be more fun. The negative comments are usually pretty great, because obviously everyone out there knows more than the person they're watching from usually, and so they've usually got something to say about that. But sometimes when some people throw out some good data, I can change my mind. I'm not that obtuse. All right. Anyways, please subscribe, like the video. I hope you all have a great day. Obviously, the situation we're in right now with the stock market and the tariffs is extremely interesting. Scary for a lot of people, and that's understandable. I think it's important to have empathy for people that are at retirement, just retired, about to retire. These hits to their retirement portfolios can be really scary and damaging, especially when the people have just put their money away for years on end into a 401k. They've never really paid that much attention to it. But when you get close to retirement, now you're really paying attention, and that this can be a really scary situation. So I don't want to make light of you if you're in that situation. My heart goes out to you, but this too shall pass. It always has. And if you have any extra income, it might be smart to look into picking up some stocks for some great gains for years to come. Anyways, guys, thanks for tuning in. My name is Trey, and I will see you at the next video.